everybody. It's a wonderful morning on this first day of the month. November is in full effect. Good morning, everybody. Thank you guys for being here. All right, let's do this. So, good morning. Today's probably going to be a pretty boring day. We got massive news event coming up tomorrow at 2 p.m. Eastern Standard Time, which will be the Fed minutes. And then at 2:30, we're going to get the speech. And I just assume that it's going to be a little bit more of the same. We got low unemployment. We got, a good positive GDP. It's probably going to give the Fed the room that they need to go ahead and continue to do what they're doing. PCE was higher Friday, and the market reacted bullish to that news, which shouldn't be, right? Typically, when the Fed is doing everything they can to drop the interest rates, they got a 2% target, or not interest rates, excuse me, the inflation with a 2% target on core PCE got another uptick. Then they're probably going to continue to be bullish, which could lend credence to the fact that this is just a bear market rally. Basically, this Sunday morning, every Sunday we do a live stream just for the channel members and Patreons, and we were discussing what we were going to be doing moving on into the beginning of this week, what we were looking for to happen, and then how we were potentially going to play the actual news event itself. And basically what I had said yesterday on Sunday during that stream was that I wanted to see Bitcoin pull back, as I would much rather Bitcoin be trading negatively coming into the FOMC, and then we could potentially see a buying opportunity occur then. If it was trading up at the highs around the same time, then it was probably going to be more or less a sell trade. So this morning, the trade has already taken place as far as the short. If you're looking for longs, you're probably going to be looking to be a buyer around this area because that is your daily open. We'll go ahead and pull this up real quick. You can see for the last 5 or 6 days here, you've been trading sideways, which is to be expected. Nice big rally coming out of last week. This week, haven't really went anywhere. This is your Monday print. That is also the first day of the week. Well, yesterday we closed red, but that also made us green on the month. So your October monthly candle had a green close. You can see it here. All right. So yeah, there is your close there. It was up and it was back above monthly support. In my opinion, as long as you're trading above monthly support, which is $20,522, you could potentially be looking for upside trades all the way and up to at least September's high. That would give you a bullish target of $22,790. And then ultimate target would be resistance, which is a little bit higher at around $23,307. Anything after that is just going to be cherries on the cake. We did indeed get long. Once we took out third quarter's low and got a bullish reaction here, that is what gave us our bullish bias into the last couple of weeks. And we have been very successfully trading Bitcoin to the upside on this rally. So, being a day trader, it gives us the opportunity to move in and out quick and nimble each and every day, while everybody else is sitting in drawdown, watching a very, very sideways market. It gives us the opportunity to go in there and hit our licks each and every day. We don't always get a setup, but if it is there, we do take it. And since there really isn't much to do today, let's go ahead and discuss the last 2 setups that we've seen, one yesterday and one today. But back to, if you are looking for long trades, then the open is where you want to focus. It is yesterday's close, which means it is going to be daily support. And if I pull this up here, you can see how the last 2 hours you have tested the open and not been able to get under there. So basically, if you close an hourly under this candle, then there is a chance that you will see a fresh daily low. But the SPX is trading on highs. That is important. It is very important. Earlier this morning, I posted a tweet saying that if you were looking for shorts, because let's be real, if you got short anytime last week, that trade got stopped out, you lost money. Very few short trades worked last week, except for maybe this one here. But the rest of it, was pretty much to the upside. I think you're early. I think you're still early if you're looking for shorts on this asset. However, Bitcoin is different, where this asset closed very, very strong on the week last week. You can see here, there is a potential breakout in place as well, especially since yesterday you traded down to your trend line and closed above it. And today you're getting that continuation. That is daily resistance. So I basically said if you close an hourly above this level, then you might want to wait and see what happens instead of taking the short trade. If you would have paid attention to that advice, you would not have entered short. Or if you had entered short on this hourly candle, you would have closed it on this one. And now you're actually starting to get a downside reaction. So this would be what we consider a trap. You would need to take out the low of this candle, which you just did. So now moving forward, it is the open 931. So you're getting this very short, quick move here to the downside. You can watch daily resistance moving forward. If you close an hourly above it, you leave it alone. If you're unable to close an hourly above 39.11, you can look for sell trades. The Bitcoin sell trade already transpired. It happened at 6 o'clock in the morning. Once again, we were able to generate profits coming out of today's range. Unfortunately, I can't go. I mean, I could go live that early in the morning, but what's the point of going live at 6 o'clock in the morning saying, hey, this is the trade I took. Wish you were here. So I figured I would just wait until we got the actual market open to come in and then see what happens. It wasn't a very successful short trade. Today's wasn't. All we were looking for is we were watching daily resistance here. And when we closed this hourly candle back under daily resistance as well as under intraday resistance, we got short there, stopped there. And it wasn't very long. We took profits here because that's the daily open. So in order to be a successful day trader, you need to trade within side of the daily range. You don't want to be having expectations of targets that are not on the chart because it's less likely to happen. Daily opens, daily closes are areas where people put orders. So daily opens and daily closes are levels where you will see a lot of volume take place. So if you're short, you're shorting into the daily high or the daily resistance, natural point to take profits would be the open of the day. Then you take your profits, you move your stops to break even. If you get downside continuation, then that trade will end up paying you. So we did the exact same thing yesterday. Yesterday, we did the exact same thing. And when I say we, I am discussing the Discord. I have a private Discord. We were watching daily resistance yesterday. So a couple people were inside the Discord were very good. They were able to get into this entry there, right there at $20,820. There was a few people that shorted it right there. And you can see that ended up being a phenomenal trade yesterday. And it worked out beautifully. I, on the other hand, was able to enter here at hourly resistance because I don't come to the desk until 6 o'clock, right? So this had already taken place. So I just waited for the retest of it here. And that's when I put my short entry on, stopped right up there. Boom, took profits on the move lower, moved the stops to break even. That trade is still open to this very second. I did end up taking profits again yesterday as it moved even lower, taking out the day low, taking out the previous day's low as well. It was a phenomenal trade. Lots of profits on that one. And this morning, a smaller, more conservative trade, if you will. I think I booked about 8% gains on that. So, I mean, our hit rate is phenomenal, right? And we're able to get these areas, we're able to take these trades, and we're able to book profits constantly over and over and over again every single day of the week if we wanted to. But here's the thing. We're not trying to push or rush anything. What I wanted to see is I wanted to see Bitcoin trading down around monthly support coming into FOMC. As long as it's above monthly support, I could potentially look for a liquidity run below the low of day and potentially even getting under this low over here. This white line is your monthly support. So if we did get that liquidity push beneath these two swing lows, then we could look to buy that in anticipation of expansion continuing to the upside. If Bitcoin's trading at the highs coming into tomorrow, it's going to look like the exact opposite thing. Now, we do have NFP on Friday as well, which is another big jobs number. So whatever moves transpire for the rate decision and then the speech could be faded on NFP. So we have a very peculiar, I can't even say that word. We have a lot of high risk news event coming up this week. So it could be very volatile, massive price swings. It could look extremely momentous to the upside. That would bring people in to get them long because FOMO is real and it is very much in this market. And you can see how people are acting and talking about Doge again. Doge is up 100%. So everybody's, professional traders again, those that are watching Doge. So yeah, everybody's starting to get their FOMO pants going. And we definitely want to be contrarians to those people. All right. We want to be contrarians because typically the market moves in the direction that hurts the most, right? It hurts the most. So we can get a slight idea about what is going on. Let me see. We got 61% of clients net long on oil, so we were looking contrarian side to that. The short setup on oil has not. Got to wait on my slow internet to pop this up. 60%. So it was 66%. Then yesterday it was 61%. Today it's 60, 61, 60. So yeah, it looks like those positions are doing different things here. I definitely want to see where everybody sets on risk. Excuse me, just give me one moment here. Let's pull this one up. All right, so it's about even. It's net even. So, yeah, not a lot of people's going to get hurt to the upside or to the downside. If we do go look at our... Now, naturally, it wants me to log in. All right. Totally unprepared for this stream. All right. Oh, yeah. And the CME Fed Watch tool, you can see that there's an 85% chance that a 75 basis point rate hike is going to happen. So we're looking for, I mean, that's still bearish. It's still bearish. So we'll just have to see how this market plays out today. I would much rather be long because long trades always make more money if you get continuation than short trades. You can only ever make 100% on a short trade. Now you can make over 100% if you're levered up, but I mean, like in general, if you do just a spot position, you can only lose or only make 100%, and that's if the asset goes to zero. So on the upside, on the other hand, you can see thousands and thousands of percents to the upside. So it's always better to be on the long trade, but in a bear market, it's not always true, right? In a bear market, you want to be looking for sell trades. So let's go back out here and see what's going on. It does look like the S&P 500 is trying to pull back off from the daily highs, which is normal. Also, I want to talk about this setup yesterday. As soon as price traded into weekly resistance on the USD JPY, I alerted everybody, let everybody know that if they wanted to be looking for short positions, you were at an area that you would want to potentially look for that position. And woke up this morning to this thing being well under weekly support. So that would have been a phenomenal place for any new short entries if you do indeed have long dollar positions and you want to hedge some of that off. You can do that, or you could have done that by shorting the USD JPY. We know that the Bank of Japan has interceded. They have bought as much, or have interjected as much as almost $50 billion. It was like 6 trillion yen or something like that. Let me pull this up over here. I can't remember exactly. Yeah, 6.3 trillion yen. So that's a lot, right? That's a lot. They're trying to get this thing under control. And what that means is they want to see it lower, much lower. So we'll see if that continues to go down. Remember, downside coming into tomorrow would be good, in my opinion. That is just my opinion. So we'll see how it plays out. But yes, I will be live streaming the rate decision and then the press conference after, because it will be important. And I do believe that it will be a tradable event. And then once again, we will be live streaming NFP. So pretty much from today, there will be a public live stream every day this week. And it's just because of the way the schedule falls and the news events. We usually do live streams on Tuesdays and Thursdays, and then on any massive news event. And we have a massive news event on Wednesday and on Friday. So we will be streaming tomorrow during the news event, then Thursday morning, normal time. And then we will start about an hour early Friday to catch NFP, which is non-farm payrolls. And we're going to be, we hopefully, if everything goes right on tomorrow's newsprint, we won't have to do anything for non-farm payrolls. The less risk that you put in the marketplace, it gives you more of an opportunity to not lose money. So, taking a couple positions for the week and catching the weekly low or the weekly high is always a phenomenal thing to do. And that's what we try to do every week. We were able to catch last week's low, and this week, today's Tuesday, so the weekly range is still being sussed out, if you will. And I don't think that it's done yet, but naturally, this is what we want to see, all right? It is a weekly opening range to be bearish if we have a bullish bias. So that's exactly the same thing I did last week right here. This was your weekly support. When we pushed down into weekly support here, that was the buying opportunity, and we almost topped or bottom ticked the low there. So we were able to catch the weekly expansion all the way up. I took the position and I basically said, if it's going to be a bullish week, I want to be positioned around the weekly low. I never know if it's going to happen, but you have to learn how to position yourself at high probable areas to capitalize on said moves, right? There was no way in hell I was going to catch the weekly range expansion to the upside last week if I didn't position myself long. Instead, what would have been happening is as price moved up and up and up, people are trying to short it. And that's not the way to go. Once the weekly range expansion reveals itself to potentially going higher, which once it gets above the open, guys, that should be your code or your hint, if you will, to stop shorting, right? For shorts, you want the range to expand to the downside. So once you get back above the weekly open and you become green on the week again, you're trying to short that, knowing that the market has potentially went down, set a weekly low, has traded up to the weekly open, and is now currently moving in positive direction. That's not a shortable event. A shortable event would have been there, and that's it. That's it. Once that trade got stopped out, because you would have been shorting at resistance, right? You would have been shorting at resistance. So when we set this low, when we traded up to there, that's where we started to say, well, it could roll over here. We knew that, but once we broke through, that was your signal to stop looking for shorts. All right. And if you did get hurt shorting the market last week, make sure you subscribe to this channel, because if you're trying to time intra-week and intra-day moves, this is the best channel on YouTube that you're going to find for nailing those trades. You're not going to find a better channel. So make sure you subscribe. But yeah, right here, once you broke out in that, and that's a very revealing breakout, is it not? You liquidated this swing high, you liquidated all of this stuff over here, and you closed very strong. Very strong. That is not a shortable event. The price should have traded up to this, stopped, and rolled back over if it was going to be a short. So anyways, moving forward, that's basically what we've done here. We made the nice expansion, set in the weekly high, then we liquidated the weekly high over the weekend, and you've just been slightly trending to the downside since. There is the open of the day getting taken out, so it doesn't look like the trade is going to be a long today. It looks like the entry, the correct trade, correct position was that short. Like I said, we took that this morning. So that trade is already, it's already cemented. It's already done deal. I've already taken profits on it, and now I am just allowing the continuation to add more gains to the P&L. My entry on this was terrible, so I'm glad to see that the Discord is actually getting better entries than me, right? My entry was terrible. I basically took the entry here, right there. So on the Bitget exchange, there is a link in the description for Bitget. If you want to be with Bitget, they have the cheapest fees in the world. There is something going on right now where there is a pop-up saying that if you are a U.S. citizen, you are not allowed to trade that platform. My representative told me that they have to do that to stay in compliance with U.S. regulations. All you have to do is click OK and sign in. All right, so it is a little bit concerning. I have brought it to their attention that, you know, the concerning part is what if one day you can't log in, right? That's the concerning part. But I have been told that, you know, that's not going to happen. So take it for what you will. There is a link in the description. I'm still trading on the platform. I still have quite a extensive amount of cash over there. I did withdraw a significant amount, but that was just on par with my strategy already, right? What I do is I trade on the inverse swap contract with Bitcoin. And then when I make an extensive amount of Bitcoin, like I am currently, you know, once it gets to an acceptable range of a little bit over 10K or something, I will transfer that off exchange, right? Get it back down to the small amount, trade it back up to 10, 15K, knock it off exchange. You just keep doing that over and over and over again. That's how I'm doing it. So that way, if something dramatically bad was to happen, I would be safe. All right. So that's how I'm operating on the platform with this concerning thing that is currently happening. Hopefully they'll get it figured out and that will stop, but we shall see. All right, with that being said, this was my short entry there on today's position. The exact position is 20590 on Bitcoin. So just $4 off of this line is my entry. And my stop was just setting above resistance, because resistance was formed at 2 o'clock during the London session open. Then you liquidated the high of day, and then you closed back under resistance. So I just threw my stop a little bit above resistance. Down to the open was a 3-to-1 risk to reward. The open of the day was my target. So when it hit my target, it automatically on this candle pushed down to the daily open and took me out of the position by 70% of the position size. I then moved my stop to break even, and anything that comes after is just icing on the cake. And we are now getting that expansion to the downside. So we do have a fresh daily low now. All right. Let me go over back to the hourly. We will pull up the actual open here. There was the open. So this was your low of day right there. And you have taken that out, and you have taken it out in spectacular fashion. If we go to the 5-minute time frame, you're going to see there was the liquidation of the making of the fresh low of day, and then you got downside continuation. This is not a liquidation break. You would not be looking for bullish entries on this. All right. What we want to see is we want to see Bitcoin trade down to the monthly support or close to it. And we want to see tomorrow when we come to the desk, everything to be quiet, right? We don't want to see big moves happening. We want to see a very narrow, tight daily range. And then when the news happens, we want to see that liquidation break. So we want to see a liquidity spike to the downside, take out those lows, and then an instant rejection back to the upside. That's the preferred method, and that would be in line with the near-term trend. All right, that would be in line with the near-term trend, which is currently up. If you look at the weekly, last 2 weeks closed bullish. So the near term is up, right? You're trending to the upside. And as long as you're not, breaking down below this stuff here, I think we can see another expansion to the upside. So what it looks like has taken place is it looks like people are deploying capital in anticipation of inflation coming off. So yeah. You can see here, right, almost the midpoint of that candle is that monthly support also. So this is about as low as I want to see price get to maintain the uptrend. A break down below this, is it bearish? I mean, yeah, it is to me, but you could still potentially come back down to here to pull back, all right, 19,490 or 461. But I honestly believe if you break below 20 grand, then the downside is coming right back into this marketplace, and we will be looking to short resistances moving forward. And that's where we kind of stand, and basically that's it, right? That's it. I mean, the day is over for me as of now. But you can see here, another thing is yesterday we had that random bullish spike on Bitcoin. Let me pull that back up. I forgot to talk about that. We had this random bullish spike here that if you would have been watching this on a 5-minute time frame, that looks big, right? If you'd have been looking at this and nothing else, just watching 5-minute candles all day and all night, you know what I mean? With your eyes all bloodshot and stuff, trying to freaking nail whatever you can. If you would have seen this, you would have probably flipped your bias for the bullishness because of how, momentous and aggressive that was. We shorted it because nothing else had this move. You didn't have a rapid decline in dollar prices. You didn't have a rapid ascension in SPX prices. You didn't have any rapidness happening at all across any other risk assets yesterday. It was just Bitcoin, just crypto. My opinion is the reason you've seen this is because, like I said, a lot of cryptos are flying right now. You got Doge, got a few other ones, football, token, or whatever. You got a couple things that are absolutely flying to the upside. So this was just the essential fake out move to the upside. Draw all liquidity in bullish and then dump it, right? But as far as our daily range goes and our weekly range, we're still in great shape to look for potential recoveries. So yeah, you got a daily support coming in at $20,291. But like I said, I think that the FOMC will at least cause a liquidity spike down to that low there at the very minimum. And then we could look to be buyers again. But it will all determine where the market is, what the day looks like, and all of that going into that meeting. That meeting will be at 2 p.m. Eastern Standard Time. We will start the live stream at about 1:45-ish p.m. So good morning, everybody. Good mornings. Good mornings. So someone tell me right now, will all of this stuff make me financially stable? Should I put time in to learn all of this stuff? I do it for a living, SP. So, I mean, yeah, it can literally change your life. Will it be hard? Yes. Will it take time to learn? Absolutely. Do you need a ton of hours in study and action and all this other things? Yeah. Are you going to have to work on yourself, stop FOMOing in and actually put a system in place and stay with the system? Yes. Is it going to be easy? Can you do it quickly and simply? No. Right? It is something that can be freaking learned. I show it over and over and over and over again. For 2 years, I have been repeatedly consistent in the way that I deliver these videos to you guys, consistent in the way that I analyze the markets, and very consistent in nailing the best entries that many day traders even get. So, like, I can show you times where I've nailed entries to where, like, they were the best entries to where maybe only 10 people in the entire world had a better entry than me. And that would be because they have a better broker than me or a better order entry system than me. Not many. Yes, you can absolutely do this. You can absolutely do it. It is not going to be easy, but once you understand it, once you have it, you never lose it. It's always there. This strategy has been effective in the marketplace since the 60s. In fact, the reason you even have candlesticks and bar charts is because of this strategy, essentially, right? All you're doing is you're watching the opens, the closes, the highs, and the lows. That is it. That is it. As a trader, your goal is to just look for entries inside of each daily range. If you're a swing trader, you would do that on the weekly time frame. If you're a position trader, you're doing that on the quarterly time frame, right? But yes, you can absolutely use this strategy to either A, supplement your income, or B, if you're good enough at it and you have, I'm talking like really good risk management techniques, you can turn it into a living. Yes, you can. 100%. I only trade Bitcoin with the inverse swap contract. As you know, I make my money, day-to-day living expenses in the FX and stock markets. When I'm trading Bitcoin, I am only trading Bitcoin to accumulate more Bitcoin. This way, I'm able to make my profits in Bitcoin, and I'm not physically taking my hard-earned money that I've already made, trading the markets, and buying Bitcoin with it. In a sense, I am uber long Bitcoin. It's no different than if I buy spot and sell call options. It's the same exact strategy. While everybody else is sitting in drawdown, watching as price moves completely sideways, and they're currently 87% off, depending on where they entered the position. They're looking at their portfolio and they're down well over 50%. I am consistently booking gains day in and day out and day in and day out. So, yeah, it's the best way, in my opinion, to invest or trade or anything. And all you need is your candles or bars. All you need is the open, high, low, and close. That is it. That's all the info you need. Getting better at identifying trend, or if you're not that great at identifying trend, we already have mechanisms in place to help with that as far as exponential moving average is concerned, right? These are trending indicators. So in a sideways range-bound market, a trending indicator is not the best indicator in the world to identify trend because it will chop you apart. We understand that. We know that. But in a trending environment, which, you know, are we in a trending environment yet? No. I mean, if anything, if you look at the 50, the 100, and the 200, you're still in a down trending environment. But as far as the near term goes, you do have a potential trend change on your hands. Will it last? Nobody knows. We know that the market will go higher in search for supply. Once it finds supply, then it will stop going higher. What this marketplace needs in order to continuously go up is continuous demand. You can't just have a big buyer setting here and expect price to go up. You need fresh buyers every single day in order to push prices higher. You're just not in that environment right now. There is tons of capital that is sitting on the sidelines waiting for the FOMC to take place, trying to get a better gauge on market direction for the next quarter, for the rest of Q4, if you will, moving into the beginning of 2023, to position their portfolios. So we do know that there was a pretty big buy that happened last week or the week prior on the SPY. It happened on 50 different orders. It was like 49 orders once and then one order, but it accounted to be about almost $7 billion at $365 and $364. So someone deployed a ton of capital there, like this Friday will make 2 weeks ago. And so far, prices have traded away from that price. Right here, $364.61 and $365. That's where all that money was deployed, at that price. So to me, as far as you're trading above this, I think that's going to put a pretty big support in the market. If you get under it, that will also increasingly make a lot of selling pressure in the market, because that person will then be underwater, more than likely. But if they're playing with that kind of money, either A, they're looking at data that suggests that this is something more than just a bear market rally. I don't think any fund manager in the world would approve a trader to go ahead and deploy $7 billion in capital in a bear market. But it is a bear market, so we don't have any idea the strategies that they're implementing. It would be foolish of me to sit here and even act like it. So yeah, this could still be a bear market rally, and we're well aware of that. But this is pretty much, as long as you're above these two areas here, I think you can see a bounce. You get under it, then guess what? You're going to be looking to sell resistances and look for lower prices, because, yeah, the supply will be there. There'll be plenty of supply. But all they did was, the first buy came in at 365. They just simply bought the previous day's close. And then the big one, the one order at 3.6 billion came in at the liquidation break. At the liquidation break. So what I mean by that is, when a fresh low of day was hit, a big buy came in. One big, massive buy. And then prices reacted very bullish after that. So we're kind of just waiting to see what the Fed has to say tomorrow. That's basically it. That's going to give us the rest. And I love the fact that it's on the 2nd of the month. So this is the very beginning of this monthly range, which means that we have the opportunity sitting in front of us right now to potentially catch either the monthly high or the monthly low. Right? Does it mean that we will catch it? No. But we have an opportunity right now. Today is the 1st of the month. We have an opportunity to potentially position ourselves for the low of the month if we think the month is going to expand higher. And we're still really close to the high. So, more than likely, if it's going to be the high of the month, then you're going to get a liquidation of the previous high. It doesn't always happen, but, you can pretty much see what I'm doing here, right? Right there. That's this month's high, but your last month's high is right there. So a liquidation of that and then a run lower, then that's probably going to be the month high. And you can see that here, right? So a liquidation above that, a rejection, that could be the monthly high. Then you can look for declines for the whole month of November, and vice versa. a stab down here, back to monthly support, liquidation of those two swing lows. That could potentially be the monthly low for November. You could potentially see November trade up. And if it does, you will have bullish targets of $21,080. That naturally will be the first target. Second target, $22,800. Third target, $23,307. Those are your three bullish targets for the month of November. And it's that simple. That simple. So yeah, you can definitely make money doing this stuff, but you just got to get good at it, and it's going to take time. Yeah, Aaron says, please hit the like. I appreciate it. If you don't mind, go ahead and smash that like button. Good morning. Good morning. Good morning from South Africa. Welcome, my friend. Welcome. Good morning. Lots of good mornings. Yes, we took profits. Yep. That was a good entry, Will. You did absolutely phenomenal. I'm proud of you. Like I said, when I start seeing people inside of my private Discord nailing better entries than I myself get, it's a beautiful thing to witness. It really is, because you're actually starting to get it. And then if you keep deploying that same mindset from here on out, your P&L will eventually bottom out. If your equity curve is going lower, it will eventually bottom out, and that equity curve will start to move forward and higher. And that's what every single person is trying to achieve in this industry, is to make that equity curve look good by going higher and higher and higher. Compounding interest is a phenomenal thing, and compounding growth, compounding that equity curve to the upside. You figure out how to do that, your financial problems will disappear. Naturally, it's going to take a long time, but you get my drift. Just to come into the marketplace, exercise risk, then take profits and get that risk out of the markets, just to be able to do that consistently, is something that 75% of retail cannot do. It's a proven fact that 75% of retail clients are losers across all exchanges, all platforms. That data is readily available for anybody. In fact, Daily Effects posts CD or whatever this exchange is, IG, their exchange. They say that over 80% of their clients lose money. Over 80% of their clients lose money. So, yeah, for you to be able to do it and do it right and do it good and make money, that groups you in the top 20% in the world. Only you can decide if it's right for you or not, though. Just swept the low of day on Bitcoin. Yeah, but I wouldn't be looking to buy it, Clipper, because you had remnants left over from yesterday's sell side. That's why we were looking for shorts today, right? Because you had this nice big bullish rally there that jerked in everybody bullish, because they see this, right? They expect that's coming, so they get stuck. When the market trades back under the low of day, everybody that got long here is now stuck. That will translate to people exiting the next day, because some people are smart. Some people, I don't know if I would set on a loss and not close it, but some people will wait for the next day, close it, because they assume price will at least trade back to their entry. But it doesn't always happen. You're seeing a little bit of sidewaysness because of the news that's coming tomorrow. So I expect this will probably be, a pretty big, the extent of today's range, more or less. I mean, could you get a little bit more downside? Yeah, but I'm not expecting any massive down move today. In fact, to be honest with you, with this right here, that's probably going to cement the daily low. And if it does, you'll probably trade sideways for the rest of the day, just sideways to up. Very small, narrow range candles. Maybe you get a run above the high, then a run above the low, and then you trade sideways going into tomorrow's FOMC meeting. And if it's down here, like I said, that would be much better, in my opinion, for the bullish trade. Now, if Mr. Powell comes out tomorrow and is extremely hawkish, then that could affect that long trade naturally, right? We don't know what he's gonna say, and if he comes out exceedingly hawkish, more hawkish than he was, then the markets are gonna sell this. They're gonna sell into this rally, and I do not see a spike going all the way up to there, right? I just don't see it. I mean, that would be a nasty spike. Can it happen? Yeah. But I mean, you would need a move that big almost to do that. Let's just see. Let's just say price stops there. You would need almost a 4% move just to take out those highs, which is absolutely possible. It's going to be big news. But it does look like it is trying to break out and maintain the bullish, the near-term bullish trend. The near-term bullish trend. But if you do believe it's going to be hawkish, then you're probably trying to position yourself for shorts. What I did also to catch yesterday's trade and today's trade is last week, all three of the accounts on Bitget, because on the Bitget platform, you have the USDT margined futures, you have the coin margin futures, which is just, Bitcoin or Ethereum. And then you have the USDC margined futures. So you have essentially three margin accounts there that you can trade. I left two of them on long because those long positions were really, really good. So I left two of them on long, and then I closed out the trade that I took Friday on the PCE numbers. I took a long position then. Made a little bit of money. I closed that whole position out. And that's the account that I essentially caught the longs with yesterday. And just by doing that, I'm seeing growth across all three accounts. Growth across all three accounts. So you can be long, short, long, short, long, short, and still make money. Not as much as if you were just one direction on all three accounts, but the markets ebb and flow. They move up, they move down. The British Bank as well. Thursday British Bank as well. I don't know what that means. Oh, that might affect the dollar. Got you. Yeah, you just got put in the work. Are you talking about monthly support from October? Yes. Yeah, that's monthly support right there. You got 19,425. You might be looking at a different exchange than I am. This is the monthly support that I'm talking about, not this September low. No, this one. Because just look at it on a larger time scale here. You set in support, and then the next month could not close below it, even though for a period of time it traded under it. It could not close below. And then August, same scenario. Even though you traded under support for a brief amount of time, you were unable to close below it. And then this happened. Big, strong move back into August's range. That was the CPI high right there. Boom. That's where the supply was. Markets traded off, closed under. So this was the first breakdown candle that we've seen since the June lows were put in, and since that monthly support was formed. This was the first time you were able to close under it. So this had us exceedingly bearish, right? But then this happened. So the bearish entry should have been roughly right in there. Maybe a little spike above, but fail, right? Fail. That's the trend. That's the direction of the overall monthly trend. That's the support, but nope, you broke back above it. That right there is what makes everybody screwed up. Have you seen some of your higher account profiles on Twitter and YouTube? The ones that have 100,000 plus K followers. talking about this is the most difficult market condition they have ever seen in their lives. Meanwhile, little old Trade Talk over here with 7,000 subs and 4,000 followers is nailing this market left and right, just constantly making percentage gain after percentage gain after percentage gain after percentage gain. We know what we're doing over here, man. And I'm not being cocky. There is a 2-year track record on YouTube. But to be honest, for the first year and a half, I wasn't doing live trading. I was basically just explaining the strategy and doing like what I think will happen in the future. But now we just do live trading. But yeah, I mean, this is the very beginning of a monthly. So if you're going to have continuation off of this month, now, generally, I wouldn't even read too much into this. Because it's just a very small range. So it could still just be a pullback, right? Off of this expansion, the downside expansion. The problem that we have is that late in the month, it became green, not early in the month. It became green late in the month. So that means for the last part of October, you were bullish, not bearish, bullish. So that means everything. And also what you did in the last part of October is you liquidated Q3's low, not just last month's low, all of Q3. That's 3 months. 3 months, baby. This wick low right here took out this low, and this low. You liquidated a whole quarter's worth of lows, and you got an immediate, and I do mean immediate, bullish reaction. What that tells me is that someone was buying with a passion. Right there. Right there. I mean, look at that liquidation break. There's the low. Right? There's your low. Right there. This is a liquidation of that low. If you were going to see more downside, if there was more supply in the marketplace, then making this fresh low, we should have seen a breakdown. Boom. And then the next bear market target would be your June lows. But that's not what we got, is it? What did we get? We liquidated that low there, and we looked mighty bearish doing it, didn't we? Boom, boom, boom. And then boom, right back to the upside. So what I did was I fibbed this, and this is all on a video you can go watch that I put out 2 Saturdays ago. I just fibbed this range. So from Q4's low to Q5's high. There it is, right? You was unable to close even 1 hourly candle under the 618 retracement of that range. That's bullish. And here we are now. So is it possible that the bears step back up? Absolutely. This marketplace is always changing. You've got buyers and sellers and everything happening differently every single day. Something differently happens and changes. This could have been very bullish, but then the sellers show right back up again. The marketplace finds the supply it needs. It's going to rotate lower looking for demand. And if the demand was here, I mean, there's several ways you can look at that even, because it is still a lower bounce. All right. When you made the low, it's higher than this stuff, but it's still lower than this. I mean, it is a difficult market, but we're constantly booking profits over here. Constantly booking profits. I actually traded this as a bounce, but I didn't even realize that was there when we did the live session. So that was my fault. If I'd known that was there, we would have been waiting for that. That's what we would have been waiting for. We would have bought it there. But we didn't, so we bought it here. Right? Here. And we'll see how it goes moving forward. It is still just a lower bounce. So the sellers can show right back up. And to be honest with you, I mean, you have broken out of this little trend here, but that's not something that I would suggest is uber bullish, right? You just broke out of a trend. Trend lines are very subjective anyways, in theory and in nature. They're very subjective. They're subjective in the way they are viewed. They're subjective in the way they are made. Some people don't use wick highs like that. Some people use a line chart. So they're just doing the close. And if you do that, then this thing has been broken out of here, right? Well, let's mark it there, right? Tested it, rejection, breakout. So, I mean, they're subjective. Whereas the price levels that we watch and we execute our trades off of, they are objective levels, not subjective. That's also why they work so freaking good. Because I'm not the only good trader out there. There are other people out there that just don't make YouTube videos that are very successful, and they do the exact same thing I do, and they look for the exact same things I look for. I don't know. It just hasn't caught on. I guess people think it's just so simple it can't be true. But you think giving a strategy away on the internet for free would spark a lot of controversy, at least have the channel growing massively quick? Nope. People want to pay for information because if they get it for free, they don't believe it. So the grift is real and very much alive. People would rather pay for information than get it for free. So we'll let those people buy the strategies and continue to throw money at bad money after bad. Be the blind leading the blind, I call it. It's a very simple strategy, and I mean, it gives you rules and everything you need to make this a profitable strategy, to make it a profitable living in the marketplace. You just got to have patience and all that stuff. Can I look at DXY? Absolutely. Absolutely. DXY got a nice little bounce. Like I said on Sunday, the level that we're watching and the level that we want to see the dollar reject at is going to be 112, right? That 112, it's a big figure number. You can see that if you knock off that 100th decimal place, it's just $112. It's a big figure number. So 112, we want to see that act as a resistance and roll over there. So like people that are getting short the dollar today, I think they're early. Yeah, they did have a successful trade had they were able to enter get the entry either at or around yesterday's high, and their stop was above yesterday's high. They could have potentially made profits all the way down to the open. You didn't quite get a daily open test. See that? You didn't quite get down there and you reversed. That's why, Will, this is specifically for you. You don't put your take profit order right at that level. You remember how you were talking in a Discord earlier about how it just missed it? Well, it's because of where you put it. Because the market did, in fact, test the open. So don't put it right on the open and then don't make your take profit exactly 110 spot 668. Do it above it if you're on the sell side. If you're on the bid and you're targeting the open, then you put it just under it, okay? Like if you're getting long down here and you're targeting this price, you don't put your take profit exactly at that price. You put it a little under it just in case it doesn't get there. You put it up a little higher just in case it doesn't get there, right? Because those price points will be sometimes front ran. Like people won't put their buy limits setting directly at the open. They'll put it above the open. So when that wick comes in to tag into that liquidity, if there is nobody setting on the bid and ask below that, that's as low as the wick goes, right? That's as low as it goes because that's the last bid right there. And then it reverses. So do it a little bit above, a little bit below. All right. That was just for Will. But yeah, DXY looks good. Here it is bouncing off of a weekly resistance. That is why you're getting the bounce there. And this is a level of concern for us here at Trade Talk as well. We understand that this trend is still very much up. It is still very much structured bullishly on the week, right? On the day, not so much. On the week, very much still intact. Very much still intact. And you can see here, weekly res, breakout. Where did we test? Right there. This happened one time before. Well, it's there, right? Right there. Resistance, breakout, trades away, sideways, retest. There. People bought right freaking there. Up. So it happened again exactly the same way here, right? They just deployed the same bot, right? They just moved it up. That's what you need for Bitcoin. You need people buying the BTFD folks. You need those people to put a bid under Bitcoin. So yeah, we know, right? We know, but we also know as long as we're not, taking out last week's high, we'll be in good shape to the downside because I am in fact short. But I didn't short this. I shorted the USD JPY. And give me 1 second and I will pull that position up. I have to log into my brokerage to do it. I'll do it on the other monitor over here. So essentially all I did was I was watching the weekly high, and once we liquidated it, I shorted it. So this was the level at which I was watching, and I had my short setting there. And as soon as we traded up, we liquidated the previous week's high. Then we rolled over. That's my short entry, but I did it on the same day. As soon as that occurred, I did it on the USD JPY. And it translated to this entry here. Excuse me, if I could get this right. Here. That's the short. Show me somebody on YouTube or Twitter that has a better short entry on USD JPY. You can find me on Twitter at Trade Talk, trade_talk_. Find me somebody that has a better entry on USD JPY. All the traders you follow, go find him or her, find her entry, find his entry, and then tell them to follow me and I will follow them, because those are the people that you want to be following. They know what they're doing. All right. So yesterday this gave everybody another opportunity to get short. Will it last? Will you get downside continuation off of it? I do not know, but it did set up as a wonderful, wonderful day trade today. Weekly resistance. Look at that wick. Let's drop down intraday. There it is. Weekly resistance. There is the market open. There is today's opening price right there. You liquidated the daily high. You didn't liquidate the previous day's high, but you did make a fresh daily high and rolled over. Boom. Boom. That was quite a bit of profits. 168 pips worth. It's getting a miraculous bounce now. So I don't know if you'll get continuation. I don't know what's going to happen with this asset long term. But if it does roll over, if this ends up being the top, then I will be positioned perfectly for it. And I'm not the only one, because look how the market reacted. This is an hourly time frame. Look how the market reacted. It traded up, triggered me into the position and fell. So my entry wasn't the only one that was there. That's where the BOJ entered their short position as well. You see what I mean? Like, yeah. Other people say they trade like the banks. I do. I don't just say it, I prove it. Right? I took the same position as the BOJ did. Probably pretty much the same freaking price. Now, I don't know if you're going to see downside continuation, like I said. But if they have to, they will intervene again, I assume. Will it be higher? Probably. They're not going to intervene lower, right? Now the intervention's already been done. They'll leave the open marketplace to decide what happens with the asset's value now. Now that they have intervened, now that they have manipulated the market, if you will, because I know people love to say that the markets are manipulated. Well, you know, hey, if they are, learn to trade like me. Trade with the manipulation. You be a market manipulator as well. Instead of being the one that's always getting screwed by them, be them. Right? If you can't, or what's that? If you can't beat them, join them. Right? If you can't beat them, join them. That's all I've done. I've joined them. I got sick and tired of losing all the time. So now we make money. But if they continue, other investors will be like, yeah, that's probably kind of a blow off right there, right? Doesn't quite look like a blow off on the weekly. On the daily, yeah, that's pretty much blow offy there. That's a 500 pip candle, ladies and gentlemen. That's the biggest USD JPY candle I've ever seen in the span of one day. That was also the most profitable day trade, Forex day trade I've ever taken in my life. I'm going to set in it. I'm a little bit less than one lot short. We'll see how it goes, right? I already took 10K worth of profits off of this trade. Down in here, I took 10K worth of profits off. I have 2K worth of profits still on. Yeah, that's what I'm risking, is that little bit of profit right there. I've already been paid. It's already the best day trade profits that I have to this year to date. That is, year to date, right? The best day well, actually, that's probably going to be the best forever. That's a pretty good day. That's a pretty good day. So we'll see. And if it continues, you don't have to go very far in order to make another 10 grand. Down in here, you'll probably be sitting at roughly about 10 grand again. And much lower than that, well, you know how it goes, right? If that's going to be the top, look at how much potential downside you can get from this. And this could be a 2-year long trade. If it continues up, I will be stopped out. And I will not have lost anything. In fact, I will have made 10 grand. Right? I made 10 grand. I will lose unrealized P&L, which is nothing. Unrealized P&L is nothing. It doesn't count. It doesn't count until this goes into your bank. That's when it matters. That's when it counts. Sitting out here on the open market, it don't really matter. But it could eventually end up being a fantastic trade, and we'll see what happens. But that was another opportunity to exercise a new short entry. I just didn't. I didn't want to ruin my cost basis, because if I enter a new short position down here, it will drop this entry down to like here, and it won't look as pretty. So we'll just leave it right there. See what happens. See where it goes from here. Hopefully it keeps continuing to roll over. And if it does, that will be good news for Bitcoin as well. Bitcoin will continue to go higher. If Bitcoin rolls back over and we become, if the risk is back in the market and the market's looking for lower prices, then I'm likely going to be stopped out of that trade. And that's just the way it works. That's the way trading is, right? Let me get back up to that. There we go. Definitely pay attention to it. My trading alone has gotten better just by listening. It will eventually click. One thing I suggest is practice risk management. You got this. Absolutely do that. This is going to be your best tool to use. It's, if you have a membership at TradingView, you can do this all the way down into intraday charts as low as 5-minute time frames. I think you have to have at least the smallest membership to get it to do that. Otherwise, you can only bar replay daily candles. But that's the tool I used essentially. And that's the tool I told everybody to use at the beginning. Don't take my word for it. Use this and see for yourself how the markets respond to these places. My job, or this channel's whole purpose, was to show you all where to execute trades and at what times. Okay, that's it. That's it. The beginning, or, welcome to the official Trade Chalk channel, where I show you how I analyze price for the most, I can't even remember my own intro. For the most consistent and higher probable entries. That's it. The most consistent and higher probable entries than you're going to find anywhere. You're not going to find a better YouTube channel to follow if you want to be a trader. If you want to be an investor, maybe I ain't for you, right? Maybe I ain't for you. I like to get in. I like to get out. I like to take my money and run. Now, I do hold investments. Naturally, I hold Bitcoin long, and I'm accumulating as much of it as I can get my hands on currently. I also have a stock portfolio that I just hold longs. But what's there to talk about there, right? What's there to learn? Buy low, sell high. That's it. Boom. YouTube video done. How to invest. Buy low, sell it more expensive. YouTube video over. All right. It's that simple. And you are in a bear market, so you've got an opportunity now to buy some of your favorite assets for a nice premium. You get to buy them for half off in some scenarios, right? Some of these assets, they got down as low as 60 and 70% off. And I got news for you. These guys are going to make money, right? They're going to make money. So that's all you do in investing. You just wait for a blow off. You buy a support. Boom, done. Set and hold it. AMD, their chip maker, one of the best in the world. They're not going anywhere, ladies and gentlemen. You can buy them right now today for 63% off. Amazon, if you buy it today, you can get it for 46% off. Who cares about Bank of America? Banking system's dead. We're buying Bitcoin. Facebook, which is now known as Meta. Well, naturally, they're doing some things that might not pan out in the future. We will see, but, that's why they're getting cooked right now. But some investments, not all companies make good investments. We'll see if Meta ends up being a good investment. As of right now, today, you can buy Facebook for 75% off. It's a blowout sale, folks. Come one, come all. Buy your favorite asset. We have assets going for 75% off. 75% off. Get them today. You know what I mean? That's investing. That's it. You buy these companies when they're cheap or cheaper. Yeah. Google and all that stuff, it's going to be around for a long time. Intel, their chip maker, they're getting decimated. You know what I mean? Maybe there's reasons for this. You have to do a little bit of research. 57% off, not bad. Nvidia, another chip maker. Tech isn't hot right now. But guess what? When the bull market starts again, it will be. It will be hot again. Tech is high beta. Big gains. People put tech in their portfolio for those big gains. That's investing. Ed, will you get rich on one insane YOLO? Maybe. Absolutely maybe. It can happen. When to YOLO, that's difficult. Doge is moving higher. It's, a lot of people's talking about it. If the bear market continues, you're going to see a nice selling opportunity here. But today, currently it's up 134% from the lows. That's doubling of the account. And if you bought it with a lot of leverage, which most people do, because let's be honest, crypto market, very, very, very risky assets. People do like to play with leverage in this market. That's a big move. I mean, that's a doubling of the account if you just held spot. If you just bought spot, you just doubled your account. And look at the support it formed down there. Just look at it. Support, support, support. For how many weeks? There's the breakdown there. That's your lowest close. That's the one you look to be a buyer at. Did you close any dailies under that? Once you got there, did you close any dailies under this price? Did you have an opportunity to buy this price once it was set? 1, 2, 3 opportunities to get long at 0.05715. That's a nickel. You had 3 opportunities to get long at a nickel once weekly support was formed. Then you just watch the dailies around it. See how the dailies act around it. You close a daily under it, then you give it a day or two. Wait to see, does it get back above it or not? Right? Because traps exist. We know they exist. So we wait for the trap. If we get a close under support, then we wait till the next day to see if does it change direction and get back above support. If it does, then we look to be a buyer at support. Because we see that what could potentially be a bear trap. We don't know if it will be, but those are the opportunities. That's it. It's as simple as that. Very, very simple. Very easy. And it produces results. If you were on the line right now saying that I bought Doge at 5715, a nickel, people are going to be like, damn, that's a great entry. How did you know it was going to go up? Well, I didn't. I just bought it there because support was holding. It did go up, went up tremendously. I don't own any Doge. I will trade it though. I do trade it occasionally. Mostly it has been to the downside, but not since we got down here. You'll find that I'm the type of person that don't like shorting the lows, right? I like to short the highs. We caught the bear market highs, and we also sold in the 2022 fresh high. And I had everybody primed and ready for that trade. Everybody. Nobody believed it was going to work, but it did. It did work. Do you think that a schedule like how you're at the desk by 6 is a big part of your success? I do. I think you should be early to work. I work for myself naturally, so if I'm not going to just have any old random schedule. I want to be sharply here at 6. There's a lot of things that I'm doing when I get to the desk. First and foremost, I'm looking at the marketplace across all asset classes. I'm not just looking at Bitcoin. I want to see what the S&P 500 did overnight. I want to see, what other things have done overnight, oil, all that. Then I'll get a short or a long bias for that day, depending on what's going on in the marketplace. And is there any high event risk news scheduled for that day? Sometimes I'm lax on that. Friday, for instance, I forgot all about or didn't even know that PCE was happening. I was looking at random stuff on the internet to buy. I was looking to buy a safe. So I wasn't even paying attention to the freaking market at all. And then all of a sudden I seen a big spike on Bitcoin at 8:30, and that instantly made me go, what news was today? I went and seen what it was, and I was like, oh, shit. Oops, my bad. Didn't see it happening. So sometimes I slack on the news, but we're not going to slack on tomorrow. We've been waiting on tomorrow for a long time. CVX making new all-time highs. Let's go check it out. I love seeing things making new all-time highs. Love it. Yeah, it damn sure is. That's probably the one that's got XLE up. Thoughts on take profit areas during price discovery? Where would you trail your stop? Trending? Oh, yeah, for sure. Probably, yeah. Let's see. You don't have any weekly closes in there. You have to kind of be prepared of a liquidation break. But since it's trending higher, you broke out last week and you just made a fresh high. So I think you're okay. So what I would probably do is I'd probably trail my stop to about 167. Because of that baby right there. Right there. If this is going to continue, it could pull back to here around 177 and find resistance. Or you can set a moving average and trail it under the moving average. Once a swing low is cemented, once the moving average gets above the high, right? There's your swing high. There's your swing low. Once the moving average gets above it, trail your stop to there. This isn't really a swing low. So to be on the safe side, I mean, I don't know where you bought it naturally. And there's a million strategies that you can deploy as far as for trailing stops. But I would definitely want to get it under the low of a bearish candle, because we know that bearish candles oftentimes act or is support, right? It's if the trend's going to continue. And then you just have to calculate how much realized profit you're leaving on the table there. And then if you want to move it higher, you could do it up there. But this is, if you do get like a blow off top, then this is probably going to have a big candle to the downside. I don't know that you will. I don't know what's going to happen. But this is probably the reason XLE is up right here. I was wondering why, because oil's down, natural gas is down, but XLE is, you made a fresh all-time high today. So it's got to be Chevron. Thank you for showing me that. So, because I mean, that almost looks like it. It almost looks like Chevron's stock. Yeah, they look very similar. So that's the stock that's got the XLE moving up. Yeah, just trail it under an old swing low, man. You don't have any bearish weeklies to trail under except for this one here. So, like I said, where you bought will determine that. Trailing stops is it's not a perfect science. It's because we don't know what's going to happen. But yeah, basically any weekly low there, you could trail that stop to, but not the current one or last week's. Because like I said, if you do find a lot of supply up there, you have a blow off move, you're going to get triggered. And that might not necessarily be the top, because look what happened here, right? Big blow off move there, trailed any stops to there, they got smoked. You had a few more weeks of downside and then boom. So anybody that trailed their stop under there missed out on approximately 23% more of upside. It's not a perfect science. It's not, for sure. But yeah, this is the baby that's got it. Got XLE moving to the upside. A couple other stocks that are trading at all-time highs for you all out there that like all-time high stocks. O'Reilly Auto Part, just absolutely freaking soaring to the upside right now. That is a breakout, and a legit breakout. I mean, it is cooking to the upside. And then Advanced Auto Parts, no, not Advanced, AutoZone, same scenario. So you can see there's still quite a bit of money coming into this asset. So a lot of people that took their money out of risky assets like AMD and Nvidia have rotated that capital into AutoZone and O'Reilly's. Why? Well, in America, private, or not private, like everybody gets around by using automobiles. Most families in America have two vehicles. Your man of the house has his vehicle, the woman of the house has her vehicle, and they drive their cars. So auto parts, good safe investment. Advanced and O'Reilly, or not advanced. Advanced is down a little bit, but AutoZone and O'Reilly, both stocks at all-time high. I'm not buying at all-time highs. I'm waiting for a pullback. I think you will get a correction in these assets if and only if inflation starts to trend lower and people start rotating or rotating capital from AutoZone back into the riskier high beta alpha generating stocks. Then you'll probably see a pretty decent sized pullback off of these. And that's when I'll be a buyer on these. But I think AMD, NVIDIA, and Intel, maybe not Intel, because I looked at a diagram the other day that suggests they're not going to see any profits in the future, or at least for the next quarter. They're operating at about a $6 billion loss right now. So maybe not them, but NVIDIA and AMD both make money. Amazon also is a very high-powered individual company that will make money this quarter. So the problem is finding the bear market low, ladies and gentlemen, and nobody's going to know when or where that's going to be, but you're never going to catch it if you don't start buying some of the lows. If you are still selling, expecting down prices, then you're probably going to get left behind. You need to stop listening to a lot of the people that you follow. I'm telling you, there's a lot of people out there that have big followings that do not know what they're talking about. They are just entertainers at best. They absolutely do not know where to put their money. A great macro find, but he's on the sell side, is 42 Macro. I've been following him for a couple years. He's a great macro analyst. He is on the sell side, though, so most of his analysis is going to be more biased to the downside. But when the market's ripe for investing, he will be a buyer again, just like everybody else. And he still thinks that we got months before you need to look for lows yet. We'll see what happens tomorrow. I'm looking for day trading opportunities, not macro investments. We are day traders over here. We trade daily ranges and weekly ranges. So we don't really give a crap which direction the asset class is heading. I do not care. I'm not on the buy side or the sell side. I'm on the make money side. That's the side I'm on. I am not an Uber bear. I am not an Uber bull. I am an Uber capitalist. I want to make money in all market conditions, up, down, or sideways. I am generating alpha. Satoshi is short. Yeah. I heard he's going to sell it all. Hey, he's CV. Oh, yeah, read that. Can you go over your 3 Patreon tiers? The hedge fund tier is the middle tier. That tier gets you into the Discord. If the Discord is where you want to be, you want the middle tier. The upper tier I was just told to do that, right? That's it. I just did it because some people really have changed, you know what I'm saying? Like, have changed their trading and they just want to give more. So I set that up for that. But the hedge fund tier gets you Discord access. The smallest tier gets you access because I have a lot of channel members and Patreons that they just want that one live stream a week because we do discuss, upcoming stuff for the week. I get them prepared of what to look for the week to come. It doesn't always play out, but, I do my best. This week, we were looking for the first few days of Bitcoin to be bearish before it happened. So Sunday morning, we were looking for Monday and Tuesday to potentially be bearish days. There's Monday, there's Tuesday. So everybody that was following that tier, they were pretty much prepared. And I told them where to look for potential sell entries right there. So if you followed that, You listen to that, you knew to wait for $20,823 to take a short. And you can see there yesterday, you got it. Right there. Boop. Thank you, Trade Talk. You're welcome. Down. They don't always pan out, so it's up to you to use risk management. You are in control of your money, not me. So if you take an entry that I suggest and you lose money, that is on you, not me. Right? But you can take the advice. All right? I'm not gonna hedge off everything I tell you if not financial advice, because, well, to be honest with you, I'm giving you financial advice. It's up to you whether you take it or not. And if you take it and you lose, that's also on you. Use risk management. You got to, because they don't always work. There is this thing called random market violence. It will get you. It gets me. It gets everybody. It gets the best of us. Random market violence is your enemy. That is why you must have sound risk managing in your trading repertoire. But yeah, the middle one. Just do the middle one. If you want to pay me more, then you can do the last one. But the perk it gives you is it gives you baller status in the Discord, essentially. It just lets everybody know that you are a baller and very appreciative. And I appreciate it naturally. But as far as the perks and stuff like that, it that's it. That's all it is. It's not much. I mean, it should be a lot more than it is, but I didn't want to turn this into a business. I just wanted to give as much info as I possibly could before my time was in, right? Give as much info as I could. The Discord was put together when, stuff started to fall apart in the last community I was in. So I decided to just do it myself. And if anybody wanted to come, they could. It's not a business decision. It's set up on a kind of like a donation. But yeah. The description of everything is in them. You just you got to read them. Read the description. It goes over everything. Okay, yeah. I took a long at monthly support. I don't want to see a retest. You know what? I hear you. I hear you. It sucks. All right. Got a long at monthly support. I don't want to see a retest. Naturally, I wouldn't either. I hate it when the market comes back to my entry. But that's gonna happen. That's trading. It's going to happen eventually. But I think you're still safe. It's if you start like cutting away big moves from under there, then I think you're gonna see lower prices. Is there a potential that the next lower monthly support holds? It is, but at the same time, am I going to sit in a losing position from here all the way down to here just to see if it holds? No, I would not. I would exit that position and re-enter at a lower position. And currently, I mean, you don't have as much of the unrealized P&L that you were looking at a few days ago when you hit 21, when you hit fresh October highs naturally, but you're still up above there. So, you might want to think about dropping off some of that risk, because there is a possibility that tomorrow's news pushes the market right back down into that. I don't want it to. I'm just saying I would potentially be a buyer if that happens. We just got to see what's going on. Now we're going to have to take the entry on instinct. We're not going to be able to wait until we hear the Fed, because in my opinion, that liquidation is going to happen well before the Fed even starts talking. So you'll get that 2 o'clock newsprint. The minutes will come out, then you'll get a spike. And what we want to see is we want to see it liquidate something on a large time frame potentially, and look to be a buyer there if it goes lower. If it continues to go lower, then we're going to get stopped out. That's just the way it's going to be. And we can wait for, a different level. Watch to see if that level takes place and look to be a buyer there. But if the press conference comes out and he's uber hawkish, you're not going to even want to be a buyer, in my opinion. This whole entire rally will be sold off, be faded. Right? Potentially. I don't know if that's going to happen, but it could. Those are the two scenarios. Either this market finds support and you get another expansion, probably for the rest of November, I would say, or you set a November high and you trade away from it, probably for the rest of November. There's a central bank calendar right here. I don't know if it's going to give us, let's see, Federal Reserve. All right, so November, and then the 14th of December, you'll have another Fed meeting. So yeah, potentially whatever happens tomorrow will decide November's directional bias. All of November. All the way up into December. And then you'll get, last 2 weeks of the year, we'll wind it down. And then we'll be looking for entries for Q1 2023, baby. We're going to close the year out strong, and we're going to look to start the new year off strong. That's what we do. It would be fantastic if we could get a yearly low to buy, but it doesn't always happen. Sometimes it's a yearly high to sell. It was, this year. This year we had to sell the 2022, the fresh yearly high. That happened right here. It happened in March. We got a fresh yearly high, and that was a selling opportunity. I'm not saying that in hindsight. This is where we sold, right? We were looking for this to happen. We wanted to see a liquidation on this double top here, make a fresh yearly high. Then I wanted to see a sideways market. If I got that, those were words for word what I said in the live stream before this happened. If we get that, I'm going to get long down here. In anticipation of that, I'm going to take profits here. I did right there. Boom. And I said if it trades sideways for a week after making a fresh yearly high, I'm going to short it. It did that. Fresh yearly high here. 1, 2, 3, 4, 5, 6, 7, 8, 9 days of sideways. Down. I sold it right there. So that's what we were looking for. That's what happened. And it wasn't because I'm a great macro analyst or anything. It was simply because I'm a trader. That's what I do. I trade these ranges. All of them. All the way from a yearly down to a daily. 5-minute time frame. We try to stay away from the 5-minute. The hourly is the best time frame to look at. Yeah, Edom says he's been here since day one. All right, good stuff. Heath, exactly. Choose your stop loss. It just depends on what the entry is. So this morning when I took that entry, I just did it over the resistance. So like I was looking for here for the entry right there. And I just put my stop loss above this resistance. Because it was yesterday's open, first and foremost. Yesterday's open. So I seen that yesterday's open was acting as resistance. So I just brought this line down to the intraday resistance. All right, because intraday resistance forms at the higher time frame resistance. So when I took the entry, I just put my stop above that. And it looked like this. Hang on, let me get the right one. So that's the open. Not quite the open. So this is what I was waiting for, a retest of that. So it was here. Right there. Right? And then the hourly res again is there. So going back into the 5-minute time frame, once we broke down below, this is hourly supply right there. Broke down below it on the very next candle right here. It traded up. Now that moving average was not there. I was not looking at it. That is not something to take entries off of, especially on a 5-minute time frame. I was just taking the entry here, right? But as this traded up, I market sold right there. And I threw my stop above this. So I have a 5-minute resistance there and a 5-minute resistance there. Stop loss was right there, 20643. So we'll put entry there. You could do the stop right like that. And then the daily open. Was right there. So this was my target. That was my trade setup. It was almost a 3-to-1 risk to reward. That was my entry. I entered on this wick right there as it was pushing up. So my entry isn't nearly as good as the entry my people in the Discord got. Some people in the Discord took that short, right? And then it played out like this. Boom, done. Instantly, my profit target was setting just above this level, just above it. So on this wick down, it took me out of the trade. Out. 2/3 of the position gone. Stop is setting at break even. So it looks like this. Anything above there, I'll be stopped out of the trade. But I have already booked 8% in gains. 8% in gains. So I cannot lose money on the trade. I already made money on the trade. And I do still have a significant portion of unrealized P&L on the table. So if I do get, another significant move lower, I can take more profits. Risk free. Like, I have zero risk on the table. My risk is completely out of the market. The market cannot hurt me. It cannot make me have negative P&L on the day. And that's a good place to be. It really is. It really is. And just years and years of constantly failing and failing and struggling and struggling and failing has got me here, right? I had to be a loser for many years before I could ever be a winner. But this is what we currently have. I never know what the market's going to do, ever. So I want to get that out there because a lot of people think that I know what the market's going to do just because I simply make phenomenal calls. It's not. I'm analyzing price. That's what I am, a trader, price analyst. So you can see there was my original profit target. I ended up making a little bit more on unrealized P&L to the downside here. And I can leave this position on forever. I never have to do anything with it again. I can leave it on forever. Now, if the market trades sideways for multiple days, then you got something called It's you got to ask yourself, do I want to stay in a position that's not making any money? Because you do have to pay, right? You have to pay. Hang on, I got to take this call. My truck is in the shop. Hang on 1 second. All right. There we go. So yeah, we'll see what happens. But there's a cost benefit to staying in a market that's moving sideways, especially once you've decreased the position size substantially. So the whole glory about the strategy is when I am able to take these high probable entries, it allows me to go in like leveraged up, right? Like levered up to the hilt in some cases, because I know what I'm risking, right? With that position size, with the size of the position minus the stop loss. I know exactly how much percentage loss I'm taking to the account. But what it does is it allows me to carry that leverage further than, say, a normal person could, just by taking positions at random places in the chart at random times. That's one thing that I try to keep people from doing naturally, is there's only like 3 times that you want to be looking for entries, and that's around the major market opens, the Asian Open, the London Open, or the New York Open. If you trade after any of those, you're essentially in a dead spot where there's no volume coming in and you're going to get chopped up. We look for high probable areas and we take trades at high probable times. So it's like a twofer, if you will. You're taking a trade at a high probable area and you're doing it at a high probable time. And then in a lot of cases, you end up nailing the top or the bottom, depending on the directional bias of the day. And sometimes we're just wrong. Sometimes I look for trades and I'm just wrong. I just get stopped out. It happens because I have no clue what's going to happen in the future, right? It's about risk management and probabilities. I know over time, if I keep executing the same entries, that I am profitable. And I will be profitable. And over time, it happens. Yeah, it's fantastic. Once I'm done trading, I usually am done around 10 o'clock, 10:30. I straighten up the live stream. I answer questions. And then sometimes I do, whatever I feel like doing for the day. Do some errands or whatever. Lay on the couch and watch TV, whatever. I shouldn't be laying on the couch and watching TV because I'm trying to get my health back. But sometimes that's all I feel like doing. But yeah, we'll go ahead and wrap this up pretty soon. Now that you're better at trading, are you risking more than 1% to 2%? No. In FX, I never risk over 1%. Ever. Never, ever, ever. 1%. I take the same risk percent entry every time. The one thing that you need to be, what you have to accomplish in this game is you got to be consistent. Okay? So like what that means is you have to take entries the same all the time. No change to that. You cannot change it because you need to be consistent first. So that way you can then see where you're doing good and where you're doing bad. So especially in the beginning, I wouldn't even suggest risking a full percent because you're not trying to make money in the beginning. You're trying to find a way to change your equity curve from sloping straight down in some scenarios to being sideways and then ultimately moving up. So in order to do that, you have to be very consistent in the way that you take entries and how you take the entries, meaning how much you risk. You have to risk the same. If you risk 4% on this entry, 2% on that entry, 6% on this entry, you're not going to have a consistent equity curve there. Not even if you're right. Like if you're right on direction and you're right on those trades every time, you still are not consistent. You're just luckily profitable. Because if you go through a drawdown or, you get in a case where you're losing 6 or 8 trades in a row, by risking different percentages each time, you're going to lose a lot more money. So you need to be very consistent in the way that you take your entries. And that is the strategy that prompts your signal for entry has to be consistent. And the amount of money that you're risking has to be consistent and a very low amount. So since I cannot see into the future, the one thing that I cannot do is risk more on any specific trade. If I risk more because I think I'm going to be right, then when I'm wrong, I'm going to lose more. My objective as a trader is when I approach the markets every single day, I'm not asking the markets how much can I potentially make today. What I am doing is seeing how much am I willing to lose today to see if I'm right. So I wait, I look for my setups. If I see the setup, I make the ultimate decision. Do I want to lose money today? And if I look at my P&L and I've been very consistent in my winnings lately and I'm up, say, 8 or 9% on the week, then yes, I am willing to risk 1% on this entry. I never approach an entry and think to myself, hey, how much money do I want to make today? It's impossible to do that. You can't do that. You can't see into the future. So therefore, there's nothing in this approach or in this market that's going to give you that answer. Nothing. There's no such thing as confirmations. There's no such thing as anything. I have no freaking clue what's going to happen. So I approach the market as I am willing to lose 1% today on this setup. And then if another setup happens, I approach it the same way. Am I up on the week? Yes. What if I'm not up on the week? How do I approach it then? I look at my P&L and I simply say, am I willing to risk 1% on this setup? And if I'm wrong, I'm going to cut into last week's profits. Am I okay with that? If the answer is yes, then I deploy the strategy. I take an entry. Sometimes I am right. Sometimes I am wrong. And if I'm up on the week 8 or 10% and it's Tuesday, I'm not even going to trade for the rest of the week. So a lot of members come into the Discord expecting me to give them entry and exit signals 57 times per day. It's not going to happen. You're going to get an entry signal if I take an entry. And if I don't, you're not getting anything from me. I'm not a call service, right? That's not what I'm doing. What I'm doing is I'm trying to help you guys do this yourself. That's what I want. I want you to be able to look at the market, to assess, to analyze price and be like, well, I know this is resistance. I know this is support. I know that this is happening. I want to place my entry here. I already know where I'm going to put my stop, and I already have a profit target objective. So when I enter the marketplace, my stop is going to be there, my entry and my profit target all in one fell swoop. I'm not adding nothing later. I'm not changing nothing. That's it. So I can consistently get good at doing that. Then I will consistently see my equity curve over time go up. That's the approach to trading. I don't have a specific set of money that I need to make this week. It's just I simply approach it with how much am I willing to lose to take this entry. And if it's not the best of entries or I'm not up really significant, like substantially for the week, I'm not taking the entry. The beginning of the week is the best part for me, because usually I haven't taken a trade yet, or if I got lucky and made 10 or 8% on a Saturday or a Sunday, then that just means I'm going into the week already up, and that's going to help me take stupider entries. So I still do that sometimes. Sometimes I take an entry and I get stopped out and I realize that I analyzed the chart completely wrong that whole day. Like there were other signals suggesting that we should have been looking for buys instead of sells, right? So, I mean, that's all part of it. This is one of the most rewarding things in the world to accomplish, simply because of time, and time is the most precious commodity the human being has, because none of our time is guaranteed. You're not guaranteed 1 second of life. Therefore, you're definitely not guaranteed 1 cent of money. People just approach it wrong. Everybody wants what they want now, when they want it, how they want it now. And there is no waiting. There is no hard work, no dedication, no nothing. It's just give it to me and give it to me now. That's what social media has built. That's where we are, right? And a lot of smart individuals that aren't even traders decided to monetize that. And now you've got people selling courses that shouldn't be. You know what I'm saying? You got people teaching people that shouldn't be. You got 18-year-old kids right now on the internet claiming to be trading sensations. 18 years old. 18 years old. It took me 10 years just to get decent at it. But yet this man is 18 and he's a sensation. Maybe one or two in the entire world I can see, just out of flukeness, out of sheer luck. But 75 on Twitter alone, yeah, it's unlikely, right? It's unlikely. So you just gotta approach your thinking. It just needs to change. You gotta have an approach to the markets first and foremost. You need to be able to identify support and resistance. And no matter if you've watched Inner Circle Trader or not, because he has a massive following, there is support and resistance in the marketplace. I take my entries at it every single day, and I go head to head with him anytime he wants. We'll do a live stream together. He can host it, and then I'll host it. I don't care. I'll go head to head with him. I don't think there's a better trader in the world than me. You know what I mean? Not on the internet, not selling courses. I don't have a course for sale. He did for many years. Like $1,400 to become his mentorship. All right? You can get all the info that I provide for free. You don't need to come to the Discord. The people that are in the Discord, it's because they want to be there. I have people that's been in that Discord since the very first day it opened. They ain't going nowhere. They just want to be there. That's it. That's all that is. It's a community. I'm not charging for that. I'm charging for the questions that I get asked, right? Because you have 24/7 access to ask those questions. That's where the value in lies. And that just being able to ask me questions 24/7 is worth $1 a day. So, but you got to have an approach. I can help you with the approach. I will not be able to make you profitable because that's coming from you. That is your job to do. You got to be able to control your wants and everything, your desires, when you take an entry, when you don't, like all that's going to be on you. But I can help you. I can point you in the right direction on what you need to be looking for and when you need to be looking for it. How you execute once that happens, that will be on you. That will be your learning curve. I'm not offering some amazing signal service or something like that. I want people to be able to do this the right way. I know that most people blow their accounts. I know this. I've seen it. It's been 10 years I've been looking at social media, looking at people blowing account after account. And it will happen even if you decide to join my Discord. You know what I mean? If you don't have sound risk management, you're going to blow your account, especially on Bitget, because you can move that slider bar of leverage all the way up to 125x. I don't suggest it because first, the fees are terrible, but you still can. It's there. That's on you. Self-control, discipline, those are required skills for this. If you don't have any self-control or any discipline, you should not be trading. Be a sports bettor instead. I suck at sports betting. I always lose if I bet. Always. I never win. Ethereum, let's go look at it. We'll wrap this up. Massive rant there. Ethereum it looks almost identical to Bitcoin's chart, and it usually does because the same liquidity providers in Bitcoin are in Ethereum as well. They're the two biggest assets. When Ethereum is beating Bitcoin out, then you'll have bigger moves on Ethereum, and ETH BTC currently, or for the last couple of days, has been moving higher. So there might be better opportunities on Ethereum than Bitcoin. But this could ultimately just be a pullback. So it's just whichever one you want to trade. But let's look at Ethereum versus the US dollar. It's trading up into resistance. Let me make sure those areas are resistance. Okay, so you have a potential supply zone there. That's probably why you stopped right there. Your next resistance would be up there. So if this ends up being a bullish week, it's not yet, but if it ends up being one, you have a potential target of last week's high and then there. So first potential profit target would be 1659. Second potential profit target, 1766. Nothing beyond that. Nothing beyond that. Take that and be happy with it, and then go wait for the next weekly to take another entry. But we are looking to potential cap to catch the low of the week here, moving into tomorrow. And this is going to basically do whatever Bitcoin does. But there is your weekly levels. And then if you drop down to the daily, you're going to have daily support on the same day that Bitcoin does, right there. That's last Thursday. That's going to be daily support, potentially. Since you're trading and closing dailies under weekly supply, you can go ahead and just mark that off as potential support. This is going to be potential support as well. It just depends on how today closes. If you close under this, then I wouldn't even want to take entries until here. I wouldn't do anything till here. Because I don't think tomorrow is just going to be looking to liquidate a day. I think it's going to be looking to liquidate a big portion of stops. So I would like to see both the assets trend lower, because this is a potential target still, this wick low. So, I mean, coming into tomorrow, that's what we'll be watching, which I won't be watching Ethereum more than likely. But you could potentially take an entry there or there, but we just have to wait until tomorrow. We got to see how today plays out. Today's trade has already taken place. The entry on it did not happen. It didn't get up there, right? But did you form an intraday resistance up there is the question. Today, not really. So you see how difficult and how much different the Ethereum looks on the intraday price. Like the analyst portion of figuring out your entry is completely different. Bitcoin held at resistance. Ethereum broke out. It was a trap, but it broke out. Would I have still been able to trade it? Absolutely. Because this was the breakout candle. So that's daily resistance. Since it didn't make it, you got to look at intraday resistance, and intraday resistance is there until you get an hourly close above. You got it here. So we wouldn't have been trying to jump on this short until the trap candle's low is taken out. And you did that right here. Boom. So on this push lower, you cemented this candle as a trap. Your entry would have been there. Your stop right above that wick high, right there. That would have been the trade on the day. And I would have taken it if I was willing to, if I was looking to trade today. And I did. So I did take the entry. I just took it on Bitcoin. But the same thing played out, right? Now let's go in and see, did we hit daily open? Of course we did. Right there's your daily open. So you did get to target because just a second ago, this candle was red. That means it was trading under the open. So right there is when you hit your profit target. It wasn't quite as good of a setup as Bitcoin. This one would have been a little bit less than 2-to-1 risk to reward, whereas Bitcoin provided a 3-to-1 risk to reward. Not even a 2-to-1 risk to reward here. See that? 1.32 to 1. So just by looking at your risk to reward before even taking the trade, you would have noticed that there's not even a setup there. You see what I'm saying? because that's got to be your profit target. It just has to be. We know that the daily opens will act sometimes as support, and we don't know what's going to happen if it gets there. We don't even know if it's going to get there, but we definitely don't know what's going to happen once it gets there or if it gets there. You just, like I said, I can show you, I can show you these things so that way you can do it yourself every single day. But just by flipping to Bitcoin, you'll see that the opportunity was much better opportunity. Same scenario. There's daily res. So that's where we were approaching entries yesterday. Today coming in, we were watching the open instead of that of yesterday. Because yesterday traded up, tagged resistance, closed out red. So naturally, if we're expecting continuation to the downside today because you closed red yesterday, this is where you're looking for your entries. Okay? Because if the market is going to see downside continuation, it shouldn't go much higher than that. Then we go into our intraday chart. Right here. Like I said, there was a couple Discord members that were lucky enough to take that entry. I myself was not. So here's yesterday's open. This is where we were trading this morning. I can clearly see that yesterday's open is acting as resistance because you are not closing hourly candles above it. Not closing hourly candles above it. All right? So that is resistance. But I want to focus my entry tighter than that. So that is where I'm looking for my entry. Right there. And you can see how on this hourly you did tag that before then falling, right? You went right up, tagged resistance right there and fell. So I wasn't quick enough on the draw, but by just looking at this as your entry, you would then take your tool here. You know you're looking for a short. You can put this stop wherever you want. Just above resistance would be fine. If you want to get it above the daily high, you can. But I just had it there. But my entry was lower. Once again, I was watching supply, so my entry was roughly right in there. But approaching this, we'll get rid of that line. That's where we want the entry. And our target would be the daily open because we've already traded there. This is where the day opened. Then you traded up to retest this. So if that continuation is going to continue, we don't know that it will. That's your trade setup. You have a 3-to-1 risk to reward on this. So this was the better setup on the day. And that's all we do day to day to day to day to day to day, every single day. Sometimes we're wrong. All right. Definitely changing lives, helping people. Yeah, that's what I'm trying to do. At least for me, certainly kept me out of trouble. That's a good thing. Appreciate you. You guys are awesome. I appreciate you as well, for sure. Very much so. Do you ever practice with bar replay? I did. That's how I built my strategy was bar replay. I don't anymore. I don't look at it very often anymore. I have several different strategies that I deploy now. I'm not just, this is considered a retest strategy, right? Because once the level is formed, we want to see a retest of that level, as that allows us to gain entry. If we don't get the retest of the level, we don't get the entry, and that happens sometimes as well. Sometimes we just don't get the entry. But since Ethereum made that trap, I kind of got lucky on this entry because that's supply right there. And like I said, that's where I took my entry, a little bit above it. Because when that 5-minute candle closed, the next 5-minute candle pushed up a little bit above supply. I just market ordered in through my stop over resistance. And price just instantly fell away, right? So target, stop, entry. You go back into the 5-minute time frame, you can see this here. This was the exact time and candle that I entered on here. So this is hourly supply. This candle closed above it. This candle pushed up. So I just market ordered in. I didn't know if it was going to continue up, right? I had no clue. I was just looking for downside continuation based on yesterday and the day before. So I market ordered in, stop above that, right above there, target right there. And look how perfect. Beautiful. I'm out of the trade. My risk is out of the market. It's gone. Now I just leave the rest on to see what happens. If you get downside continuation, beautiful. You can take profits again, right? But it doesn't always play out. Sometimes our target gets hit and then price comes right back up and stops us out. That's when we're on the wrong side of the market usually, because then you'll get that continuation up. But with this strategy, you can still be on the wrong side of the market and still make money. And that's the beautiful thing. You don't have to be right all the time. But for right now, longer term macro naturally is if we're below or above monthly support, we're going to be looking for bullish entries. If we get below $20,000, which is, monthly support, we're going to be looking for bearish entries moving forward. Right? Because all we're doing is trying to stay with the market. We want to be on the right side of the market when we take our entries moving forward. And that's a pretty good line in the sand for me. All right. You guys have a fantastic day. If I missed any questions or if you have any questions, you can drop them down in the comment section below once YouTube gets done uploading the video. You can also email me on my about page if you need to get a hold of me that way. And yeah, we'll see you tomorrow at 1 o'clock, 1:45-ish. We'll come online about 15 to 20 minutes before the Fed news print, which will be at 2. So we'll be ready for it. And the day will already be planned out. So the first 15 minutes, we'll just be talking about what we're looking for. And then we'll go from there. And we'll be live again Thursday morning and then Wednesday morning or Friday morning because of non-farm payrolls. So a lot of big risk event coming up this week. And that's an opportunity. So we're going to watch it and we'll trade it live. If you were considering joining, you're not talking to me. Bro, do you use Binance futures for day trading? No, I use Bitget for day trading futures. Bitget. There's a link in the description. I'll post it in the first comment in the comment section if you want to check it out. All right. Yeah, you guys make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.